All right, let's talk about the future. For most of us, that means listening to experts, watching the news. But what if there was another way? A way to see what's coming that's driven by data and dollars, not just debate. Today, we're diving into how you can get a mathematical edge in the world of prediction trading.
You know the feeling. We are just swimming in information. Every single day you've got talking heads, breaking news alerts, hot takes all over social media, everyone telling you what's going to happen next. And trying to find a clear, honest forecast in all that chaos? Whew, it's next to impossible.
So, that's the big question, right? In this world of just constant noise and experts who completely disagree with each other, how do we find a real signal? Is there any way to figure out what's actually likely to happen?
Well, what if I told you there's a tool out there with a truly staggering track record? We're talking about a method that, on everything from huge elections to major economic events, has been accurate over 80% of the time. It consistently beats the traditional polls, the pundits, you name it. And this tool is called a prediction market.
So what on earth is this thing? Honestly, the easiest way to wrap your head around it is to just think of the stock market. But instead of buying a piece of Apple or Tesla, you're trading on the outcome of real-world events.
The concept itself is actually pretty simple. You're basically buying and selling shares tied to a specific outcome. Will this happen? Yes or no? The market, the collective wisdom of everyone trading, decides the price.
Okay, so let's make this real. To see how this actually works in practice, we're going to take a look inside one of the biggest prediction markets out there, Polymarket. This is where all that theory gets put to the test.
So the whole system runs on these things called outcome shares. For any question, you can buy a yes share or a no share. And here's the magic trick. The price of that share, which can be anything from 1 cent to 99 cents, isn't just a random number. It's a direct reflection of the market's belief about the probability of that event happening.
And the life cycle of one of these markets is super straightforward. First, someone asks a clear question that has a definite answer. Then, people start trading yes and no shares. As news breaks and new information comes to light, the price bounces around. And finally, when the event actually happens, the market resolves. If you bought the correct share, it pays out a full $1. If you were wrong, it's worth 0. Simple as that.
Let's just break that down one more time because it's so important. If you see a yes share trading at 60 cents, that means the market as a whole is saying there's a 60% chance of that thing happening. The price is the probability. It's a real-time forecast updated every single second by thousands of people. Okay, so how do you win? How do you actually make money in these markets? This gets us to the heart of the matter. This isn't about having a gut feeling or just taking a wild guess. It's all about finding a mathematical edge. It's about understanding probability better than the market does. And this requires a completely different way of thinking. You have the pundit who relies on stories and feelings. They'll say something like, oh, I feel like this candidate has all the momentum. But then you have the quantitative trader. They look at that 60-cent price and they ask, okay, does 60% really reflect the true odds here? Or is the market just freaking out over the latest headline? And that right there is the entire game. The goal isn't to just follow the crowd or listen to the loudest person in the room. It's to pinpoint those moments when the market price, which is basically popular opinion, drifts away from the actual statistical reality. That little gap between price and true probability, that's your edge.
So what does this mathematical edge really mean in practice? Well, it means training yourself to spot when the price just doesn't equal the real probability. It means having the discipline to tune out all the media hype and emotional noise. It's about constantly, and I mean constantly, updating your own beliefs as new hard data comes in. Basically, you have to learn to trade like a statistician, not a sports fan. Now, this is all really cool for traders for sure, but the implications of this technology are so much bigger. This is more than just a new way to place a bet. It might just be one of the most powerful information tools we've ever created.
Because what's really happening here is that these markets are creating a kind of collective intelligence engine. The reason they work so well is that they force people to put their money where their mouth is. There's real skin in the game. This instantly filters out all the cheap talk and gives people with actual specialized knowledge a huge incentive to participate. The market price then takes all that scattered information and combines it into one clear, constantly updated signal.
I mean, just think about the possibilities here. What if a company could use an internal prediction market to get a scarily accurate sales forecast? Or if a government could use one to see the real-world impact of a policy before they even pass it? Researchers could get instant feedback on their ideas. The potential is just massive.
So in the end, by swapping out loud opinions for real financial stakes, these markets become these incredibly powerful engines for gathering information. They give us a clear, unbiased forecast on almost anything you can imagine, as long as you can prove the outcome.
When you boil it all down, that's what we're really looking at. It's like a mirror. A prediction market is a machine for showing us, in real time, the sum total of all our knowledge, all our data, and all our beliefs about what's coming next.
So I'll just leave you with this one thought. If you could tap into this global brain, this engine that can put a hard number, a probability on almost any future event, what would you ask it? What's the one future you'd want it to predict?